Hey everyone, I just wanted to make a quick video about markets and turmoil. Now this is very interesting. If you see CNBC is having a special of markets in turmoil, and I saw this tweet yesterday that whenever CNBC market in turmoil special happened, and after that, what was the 1 year return? And you see, like the 1 year return, they started doing it from 2010, and it has been they have done it many times and multiple times, and all the time 1 year return has been really high. But this is just like data mining. I'm not saying we will have the same return, but I'm not saying markets are really in turmoil. So average 1 year return after the CNBC market in turmoil specials is about 40%, and I believe they do it when the pessimism is really high. Otherwise, it doesn't make sense. Another one I saw is when Nasdaq 100 drawdowns and returns after closing 200-day average. So I think yesterday was the first day when QQQ or Nasdaq 100 closed below the 200-day moving average. And so we'll go see the chart of QQQ, but depending on the two week, what happens after 2 week, that predicts the kind of like 1 year return. So if the next 2 weeks we do drop higher, then then we are of course in a bear market, like 2000, 2008, 2022. But if we don't, and we jump back, or we it's not much, then we can have a positive return. Okay, so I feel right now, I think the pessimism is high, obviously, just because the top stocks, PLTR, MSTR, COIN, Hood, HIMS, all these stocks have pulled back a lot. I'll see those in a different video. And if you are following QE strategy signals, you would have gotten signals. But let's look at QQQ chart. So yesterday, so let's zoom in. Yesterday was the first day when it closed below the yellow is the 200-day moving average. It closed below at 488, and today is trying to come back up, and we'll see what happens. But 200-day moving average is like a strong support. It happened here, bounced back, and let's go back to the chart. It happened here almost and bounced back. It happened here, did a little small bounce, and then closed below, and then we had a big rally. So 200-day moving average is a really good support until it isn't. So here it almost came down here, bounced back, and then really go deep. So if the scenario is like this and it get tested, hold on, let me get the pen. Yeah. So it get tested from the bottom and then it get rejected. That means we are in trouble. And of course, this is the death cross, when 50-day moving average crosses the 200-day moving average to below. So this is the death cross. So this is very, very bearish, and of course this pattern is very bearish. Okay. So let's come back here. So here what could happen in QQQ? What could happen? I mean, I'm just like changing the scales right now of QQQ. Okay, so what could happen is we have this. So today, it bounced back and then goes back down, and it can again test the 200-day and then keep going down. This is one scenario. Another scenario is it jumps back up, again test or retest a little bit, and then it's on the way to the upside. So right now I feel upside move is more has a more possibility, but we should be have both sides of the move. But upside move has the most possibility because it has closed down, but it hasn't it hasn't closed down for multiple days below the 200-day moving average. And also looking at other indexes, for example SPY yesterday, let me see, did it close? Yeah, it didn't close. It just closed at 200-day moving average, but didn't close on the 1-day chart, like simple moving average. It didn't close below that, and today is trying to recover. So look at SPY again. It has come near here, dipped down, and then went to do a big rally. over here when it was crossing again, it tested this one, dipped down, and then had a big rally. So we can see the same scenario here. So I'm just making these scenarios up, but you should always think in terms of scenarios and not hard truths, because no one knows what's going to happen, right? But currently the more possibility is it jumps back up again, dips down for for people to get like really, really scared and then start moving up. And the other scenario, bearish scenario, is um, you know it again goes back up a little bit and then dips down and then retests the 200-day moving average from the bottom, and then have a big drawdown. But I feel like the bearish scenario is not highly probable. Okay, now let's look at DIA. So DIA is not even, it's like very strong. It's not even there. So DIA is very strong. It's like much above the 200-day moving average. So that's why um, I feel the market is still very strong. We are still in a bull market. And let's look at EFA. EFA has been Europe and Far East. It has been it did the same thing. It did the 200-day testing, dipped down, came back up, did the retesting, dipped down, and then kind of like a mini bear market, and then went up. This was the death cross, but right now it's rallying. Let's look at the China. Look at this. Like here, it tested the 200-day moving average. Let me mark it. It tested the 200-day moving average here. It tested the 200-day moving average here. So kind of using 200-day moving averages, everyone is watching it. Even if they don't say they are watching it, everyone is watching it. So and it is a really good support. So yeah, I just wanted to make a quick video that when you see a lot of negative news, doesn't mean the future is going to be negative. So for QQQ, we are still in the bull market. 500 is over 200, 200 is going up. We are still in a bull market. So again, it's not financial advice. This is just my views. Bye bye.